Welcome to the Scaleup Valley podcast, where we bring the best tech leaders in the world to share with you how to scale your B2B SaaS business from 2 million to 100 million ARR. Today, we have a very special guest. His name is Chris Milligan, CEO at Adepto. Chris, it's really a pleasure to host you. Thank you for joining us.
Thanks for having me, Mike. Glad to be here.
Yeah, so let's get to know a little bit more about yourself and how did you end leading Adepto?
So I started Adepto in Brisbane, Australia. You can probably tell from my Aussie accent. I studied HR at university and I ended up getting into contracting in Brisbane. So I was working for insurance companies and mining companies. And that was really out of university. The first opportunity I had came from some work experience that I was given. And once that project finished, the insurance company I was with said, hey, do you want to come and be a contractor? We can't hire you because we don't have any headcount, but we've got some budget, so we can put you on a contract. And I thought, yeah, great. Like I can go and do some contracting work. And I did that, and I ended up working alongside the likes of Deloitte, an INSEAD business school, and we were doing some pretty cool work in leadership development and employee engagement. And then that project finished and everyone said, hey, you know, why don't you go and become a grad or join the graduate program? And I thought, that sounds like a step backwards. Like I'm just using my skills here. I'm good at what I was doing. Why can't I go and do that as another organization? And I really struggled to find a company that would contract me. I was 19 at the time and people just looked at me like I was a bit crazy. So I ended up going and finding a small tier contracting company that I could work through. And I ended up finding a project with a gas company. And I was making about $500 a day, which is pretty good. By then I was 20. And I thought, hey, this is good, but it's got to be easier because I couldn't find anyone else like me at that age that was doing that type of work. This was before the gig economy was as cool as it is today. And so I thought, you know what, I need to help other people like me get connected to businesses who need their skills and don't necessarily want to go through all the formalities of permanent recruitment or, contracting a big four consulting firm. And so we set out in 2013, Adepto was founded, and initially the business was actually called Adepto Experience. And it was really about how do you help, because Adepto in Latin means to acquire or to obtain. How do you obtain experience as a young person? And so it was initially actually focused on helping students to get contract jobs, which a lot of people don't know. And it was from there that we then evolved into the business that we are today.
Sounds amazing, and it's a very good way of starting kind of our discussion about your scaling up journey, because a topic that I think it's really, really important is kind of the transition from the founding team to the leadership team. And it's all about also how do we grow those people as they grow quicker than the company. So how was this transition? And by the way, what is the head count today, and how is structured your leadership team, and how was the transition from the founding team to the leadership team in your case?
Yeah, so when it was founded, I was kind of doing everything. So I founded the business when it was that student-focused business. It then became a contract-focused business, just looking at all sorts of contractors, because I realized, I wasn't a student anymore. And at that point, I and a business partner, a guy called Michael Derwin, who I'd been consulting and contracting with, decided that we needed to help each other because it was very difficult for one person to do it all. And in fact, the companies we were selling to didn't need new people. They needed the technology. So we, in 2015, refounded Adepto as a technology business. And so it was Michael and I, and one of the early people who had been working through the business, Joel Luther. We kind of did everything for the first year. So it was the three of us. And we just managed the work as it came in. It's very hard to have a role description at that point in time. And so as that kind of developed and expanded, we recognized that we all had different strengths. I took a bit of a chief executive type role, looking at where's the strategy, where's the financing coming from, what's the fundraising, but everyone was really involved in that. And Joel at the time was managing a lot of the product as well as customer experience work. It was really then, as we started to scale, that we recognized having that that broad view of the work needed and that jack of all trades mentality only scaled so far, because we then needed people who understood sales or marketing or customer or product or engineering. And so there was a transition point that happened when we're probably about 15 people, I would say, where we really had to start defining the roles that each person was playing. While it was still broad, it was important they had that. So we're now 42 people, and we've got, our headquarters is now in London. So I ended up moving over here. And so one of the challenges we've had is, how do you scale the leadership and the business internationally at a really early stage and keep that culture, which has been really probably one of our, and still is our biggest challenge in terms of time zones and just getting everybody on the same page.
Because it's kind of 12 hours of difference between Brisbane and London, right?
Yeah, that's right. So London's always on calls very early. Brisbane's always on calls very late into the day.
So that's a great challenge to kind of set up the company with this infrastructure. So, and you have two founders or three founders, or two founders and one early employee?
Yeah, two founders and an early employee.
Got it. And those two founders, you went to London, and another co-founder stayed in Brisbane, or also?
So I moved to I moved to London by myself. So we tried to raise some early capital in Australia, and this is in 2015. We couldn't find investment money in Australia. The venture market was quite nascent, and we decided to instead do a sweat equity deal with a software development company. So they came in and helped us build the first version of the platform. In return, they got equity, and then we realized we still needed cash in the bank. So I moved to Sydney actually thinking that's the big city, I can raise money there. Ended up not being. So I did a trade mission to London with the Queensland government and ended up being introduced to PwC, who was running a Future of Work Scaleup program, and they invited me to participate. So I commuted from Sydney to London for about 3 months. And then at the end of that, they had an investor pitch day where we pitched, and I said, we're raising £1 million and I'll move here if you invest, or I'll move here so you invest. And we were fortunate to get that investment. So I moved to London, where I got my visa because I was already spending a lot of time in London, and then had to really rebuild the business from London as our headquarters.
Well, this sounds an amazing story. So good that I asked it. We were missing this amazing part of the story. It sounds really cool. And then all the team was kind of built there, or do you still have engineers or another kind of people in Brisbane or Sydney?
Yeah, so we have 20 people in the Brisbane office, and the Brisbane office has been the first and foundation of the business. As we scaled, the decision we took was, and there was a couple of reasons for this. One, the financing that I spoke about, but the other thing was we were selling to global 1,000 businesses. And while a lot of those organizations like AECOM and BDO had offices in Australia, the decisions and certainly the technology decisions weren't being made in Australia. And so for us, it was really London or New York as the other option. And for those reasons, we chose London. So what we decided to do was build our commercial team, so sales, marketing, customer success and finance here in the UK, because it was closer to where the decisions were being made. And so we built Brisbane as our product and engineering team. So up until earlier this year, one of the challenges we've had is that Australia was, albeit very far away, it was all product and engineering, and the UK was all commercial. So those people operate and think about things very differently. So it was only this year when we actually started to hire back in Australia commercially focused people, and also in London a product and engineering team, which we have now. So we're a lot more balanced this year.
Kind of two businesses and kind of local businesses with a global leadership, but still 40 people, you don't have space for too many layers. It's still a team that needs to be fluid and without too many bureaucracy at that stage of the business.
That's right.
Cool. And in terms of focus, it's very interesting the way you kind of, and it happens especially with small countries, for instance, in Europe, Portuguese companies For instance, I would say that one of the best examples in Portugal, for instance, is Talkdesk, which has the engineering and product in Portugal, also nowadays in Salt Lake City, and of course commercial offices in the Valley, in London, nowadays for EMEA. So this is a system that is being also with the Estonia Pipedrive, which would be one of the examples that would came to my mind. So this is a very interesting model. I think that the difficult part on your case is between London and San Francisco is 9 hours or 8 hours of difference. In your case, it's another 4 hours, which makes even more complicated to manage. And to say, especially because usually even in the same office, engineering and product with sales and marketing and customer success, there is a lot of clash, a lot of conflicts, not being in the same place, not seeing each other every single day, not having coffees together, dinners together. This can be really difficult to manage. So that's why I bring the next topic. We all know that in order to scale, we need to simplify instead of complicating things, adding too many layers. It seems that your focus was very clear. So it was kind of global 1,000 companies. Did you have the need to decide what verticals and what kind of units would you chasing inside those global 1,000 companies? So how did you drive focus as you started to grow Adepto?
Yeah, so it was difficult for us because the nature of our product, and just to tell you a little bit about that, is that we know that businesses now are using all types of talent to get work done. They're using employees, they're using contractors, freelancers, alumni, and everything in between. And businesses today don't have a view on all of those worker types. They've got a system that shows them their current employees. They've got a different system that shows them their contractors. And so what Adepto is doing is bringing that all together to give them a single view of their talent. Because that's such a broad problem to solve, you can be pulled in so many directions. And in fact, our proposition is total talent, which is very broad. So we had a lot of conversations about, do we narrow that or do we go broad? What's our differentiator in the market? What we decided to do was simplify into really 2 use cases that you could sell to any large business. So it wasn't about the industry, it was about the use case for that business. The first use case was, how do you help a business better see the skills that have already got, that are employees, and understand what people want to do and then match work to those people? So the benefit is more efficiency, happier people, and higher utilization. Well, the second use case was, how do we help businesses who are using a lot of contractors bring people in and have a relationship with those contractors without the need to use recruitment agencies and middlemen, and have a far more seamless experience with engaging those 2 people? So those were the 2 use cases we focused on. And the buyers for that were either HR or procurement. But from an industry perspective, we didn't simplify. We've got customers from defense to government to mining, accounting, insurance. So it's very broad.
And geo-wise, were they located in Australia, and then you start kind of hiring them or recruiting those new clients or acquiring those new clients in the UK, or any kind of geo relation, especially with enterprise? We always say that enterprise, it's kind of field sales, it's relationship, in-person meetings.
Yeah, so our early customers when we pivoted to become a software company were in Australia. But when I moved over here, we really stopped driving the growth in that market. And so all of our sales have been in the UK and Europe. So that's where our salespeople have been. That's where our face-to-face meetings have been. One benefit that has driven is from a currency conversion perspective. All of our revenue comes from this side, which is either euro or sterling. So it goes a lot further when up until earlier this year, 75% of our cost base was in Australia. So we were actually making more money to be able to pay the people that we had in the business. And so that had actually been helpful as a bit of an arbitrage. People don't often think about Australia as a cheap place to hire, product engineers. And
that's
it's
what
not
I was
by
thinking.
itself.
I didn't ask that. Fortunately, you mentioned that, but I was kind of thinking this subconsciously. Why else? Of course, I know why, because you are from there and you had your contacts there, and of course, contacts is also important to bring the best talent in.
Yeah, absolutely. And the other thing I'll say on the currency piece, I know we'll talk a bit about cash and fundraising, but one thing we didn't think about when we moved over here was in Australia, our metrics were strong. We were coming up near that magic 100,000 MRR figure to be able to raise a Series A. And so the business was at that level of maturity in the Australian market. But as soon as we moved here, that 100,000 became 60,000 because of the exchange rate. And the business was no less mature. It was just that on paper, it didn't look as mature. And so that then meant we had a gap because we'd kind of used the money that we needed to get to that magic mark, but in reality, we were behind.
Very, very good points. Very, very interesting. And in terms of growth ambitions nowadays for tech scale-ups, there is this famous rule that we talk a lot about in the show, which is the triple 2 times and double 3 times, kind of starting at 2 million AR to 6 million AR, then to 18 million. So that's triple 2, and then double 3 times, which will get to 18 to 36, 36 to 72, 72 to 144, which is kind of 100 million plus, which is the goal of venture-backed company, 7 to 10 years. This is world class of standards, get to $1 billion valuation and to a potential exit by IPO or acquisition. What do you think about those kind of aggressive metrics of tripling and doubling every single year? Are they realistic? It depends on the business. What's your opinion about the formula?
I think it's nice as a target. I think it obviously makes sense. It's something that we certainly aspire to. The earlier years, it's easier to hit because of maths, but I think as you get on, it also depends on the market that you're in. You know, if others are seeing that it's a successful market, it's just harder to hit those metrics. And what we probably didn't appreciate is the development required into an enterprise SaaS product, and there's the minimal viable product, but then the minimal sellable product. And at an enterprise perspective, that minimal sellable product is quite the bar's quite high on that, because the enterprise is expecting it to do certain things, especially in something like HR that's pretty important and a lot of people touch across the organization. So we invested and continue to invest a lot in product and engineering. And I think if we were to do it again, we would have invested a lot harder in sales to begin with to meet those targets, because it's really around getting the name out there and market share. And then if you sell the right vision and take customers on that journey, they can help then continue to fund that product development. We kind of took the opposite approach, which was, let's get the product right before we go and scale it. So to answer your question, I think the metrics are tough, and I don't think every business can achieve those. I think it's really important to look at unit economics in terms of what you're selling and how you're selling it to be able to get there.
Got it. And kind of before getting to fundraising, which is kind of connected with strategy. So typically in venture-backed businesses, strategy, it's all about how do we prove the next milestones to get to the next rounds, and what is the long-term game that we are playing to win the category and to be the first to win the category. And maybe let's stay there as we are discussing strategy. Let's combine cash in this segment of our conversation, which is what were the main lessons kind of raising, and let's talk about Series A because the show it's much more about scaling up. So what were the main lessons for you raising Series A for Adepto?
I think for us it was really around a couple of things. One is that valuation is not the be-all to end-all. You need to make sure the valuation is fair and reflective of where your business is at, because if it's too high or it's too low, it makes the conversation in terms of the next round more difficult, because you either haven't shown enough growth and there's potential for a flat round or a down round, or if it's too low, then people are wanting to understand how did you change this so much? You know, what happened here? Why isn't it predictable? That's number one, but not the most important. This is the first thing that comes to mind. The second one is what I think is critical is the investors that you have at the table and the value that they add. we were in SaaStock last week, Mike, and we're hearing from some investors, and one of the VCs was saying, we're not that value adding. Like, we're going to tell you we're value adding, we're just not. We're going to promise you the world, and then we're just going to sit back and and kind of set expectations. And having gone through that Series A, we've now got some great investors on board who actually on a daily basis, if you ask for their help, will get stuck in and support. And because they've got that view across their portfolio, which I don't have, they really can have some strong insights into what they're seeing is working, what is not working. And then the last one is the terms of the deal, obviously. We got a number of term sheets, and a lot of them had preference shares and unfriendly shares. We were fortunate enough that we went broad enough to meet some funds that were quite founder friendly, and we're looking at how do we just raise in a just-in-time manner. We'll give you 12 months, let's hit these milestones, we'll work with you, we'll get to know the business, we'll increase our confidence, and we'll raise from there. Not raising 2-3 years of capital that you don't need. You don't need that right now. So why raise that and then have that pressure to spend it, and also cop greater dilution than is necessary. So those are some of the I guess the specifics in terms of actually raising. Going into it, what I think is critical is having the right support around you, because it is all consuming. So the other thing that I noticed, because we didn't invest in our sales team massively until we'd raised a Series A, was our sales was affected because I was out there selling. And so because I was the single point of failure on that, we didn't see a lot of revenue growth while I was in the raising process because it's all consuming. Right. And so what I would have done differently is made sure that pre-Series A, we'd left the investment money to hire 1 or 2 salespeople to keep the business going so that I could focus on the fundraise.
Very good one. This is really, really good. And in terms of kind of considering a possible move to Series B, what do you think are the milestones that Adepto or any business from your experience would need to achieve to get there?
Yeah, so Series A is really around, in my perspective, you've validated the model, you've got customers, you've hit some early metrics. And between Series A and Series B, you really need to systemize as much as you can, because Series B is around growth. If you haven't understood how your business designs its product, develops its product, takes its product to market, markets its product, sells its product, grows its use within an organization, then adding more money to that, other than what's required to stay in business, isn't going to be the most efficiently spent. So I think that's the key thing. The second thing is we, for example, are looking at that triple growth. So in order to have a successful Series B, we want to demonstrate that we can continue to triple the business from a top line revenue perspective.
Got it. And in terms of new geos, there are some investors that would like to see for Series B that you clearly have a guide to open a new geo and to keep multiplying. Of course, if we are talking about a company based out of Europe, I would say the base out of Southeast Asia, it would be kind of the same because it's a very fragmented market as well. Unless you start with Thailand or Indonesia or Vietnam, or of course, China, you can focus on China or India. Latin America, I would say this so, but of course, if it is in the US, it's a very different story. You need to be able to scale again in the market. So coming from the UK, in your case, and before being in Brisbane, any kind of geo proofs to investors to raise Series B?
I think for us, we've gone the other way around the world, Australia to the UK. The logical next step for us is the US. So for our Series B, we need to be looking at US funds that help us with an understanding of the market, but also a validation. It's hard, I think, sometimes to break into the US, but we need to be there because our customers are international and they really require international support. So I think for our Series B, we would be looking at co-investment from the UK and our existing investors, but also getting a US fund involved to help bring into that market. I think the other thing, which may sound obvious, but from an international expansion perspective, it's language. The thing for us is it really doesn't matter where in the world you are now, as long as it's English speaking. because we can host anywhere, we can spin up anywhere, we can arrange time zones. We're very good at that. But once you introduce those complexities, that's a bit difficult.
Absolutely. That's a very good point. And you mentioned that's being your market's enterprise, London and New York being also 5 hours of difference in terms of time zone would make all sense with direct flights and multiple choices to fly there. It might be very, very easy. And of course, you also have Singapore, if they want to expand to APAC, which will be not close, but closer to Brisbane. And yeah, very, very interesting. So let's come to execution. So if we have the right team in place, if we do the transition from a founding team to a leadership team, if we keep growing the team, if we are focused, if we kind of accomplish the milestones that we need to keep funding the business and proving the milestones and keep scaling. It's all about how we make this happen, right? And it's about execution and meeting rhythms and the culture of the companies. We discuss it, being able to communicate accurately across 12 hours of difference in terms of time zone. So what are some of, nowadays, in general, in tech businesses, we all do the kind of the daily, the weekly, the monthly, the quarterly review, the all ends, all of this. So I will not ask you what are the rhythms that you have, but what is that special rhythm that helped you to have everyone in the same page, especially with this huge time zone difference that you needed to manage?
Yeah, so we've tried a couple of things, and you mentioned a lot of them there, but what I realized about 6 months ago was that we needed to simplify the decision making of the business and regionalize the way we're running it as well. So I had a much broader leadership team that was all reporting into me, and it was just getting a bit difficult to manage, not even the time zone, just the number of people. And there was really a need to localize the way we were thinking about the business, not the strategy or where we were heading, but just in terms of how we were treating our teams in each market. So what we did was we simplified into a smaller executive team, and that was made up of a head of solutions, sales, customer experience, delivery, and our CTO. And delivery was really around product delivery. What I also did was I split out the P&L responsibility for Europe and APAC into individuals. So our head of sales ran the P&L for EMEA, and our head of solutions ran the P&L for APAC. I would still have global financial conversations and make those decisions when one of them wanted to spend money, but it really gave a local sense of accountability, which helped us. When that happened, we decided as the executive team to stop meeting so often, because we're an executive team, everybody knows what they're doing, everybody knows where we're heading. So instead of dailies, we now just meet on a Monday and talk about what's happening this week, simplified it to any risks, issues, or opportunities that we need to know about. And I think that's really helped us to free up a lot of time, because we've only got 2 or 3 hours each day to talk to the other country. And so if we're spending that every day with the exec team, it's not as effective. That was one thing we did. We also then put a weekly all hands in place to make sure that everybody understood something from a different function, because as we scaled, there were obviously new people coming to the business, but also some people had never met and still have never met. And because of the time zone, it was important to bring that sense of company together. And then we do the other things, fortnightly retros with each team, et cetera, et cetera. But what we have found has been really important is defining our principles and way of making decisions, using our values as a guiding framework for our way of work, and bringing that to life in every way we can. So in each team meeting, value shares, hiring against our principles, and really getting that framework in place, I think, is the only way that we've been able to scale the decision-making of the business, because we've also been asleep most of the time when the other side of the world is making decisions.
Absolutely. That's a very good point. And I believe that for businesses that are in the same time zone and sometimes in the same location or office, we can have exactly the opposite problem, which is the temptation to always come to the CEO to make any kind of decisions, which make a burnout of the CEO or decision fatigue of the CEO that will be involved in decisions that don't add any value to the business, and at the same time be super, super tired when they really need to do something that is strategic for the business and then can put the business in a difficult or tough situation. Absolutely, that's an amazing point for all businesses to implement. Cool. There was something, yeah, I love the way of the principles and values and the framework that you kind of work. And just on this, for businesses who would love to work more on the decision matrix, on their frameworks, where do you suggest to start? Because I think this is really, really important, but sometimes there is a lack of understanding about where do I start?
So for us, we got in a room together. So the leadership team sat down, and I bought everybody Ray Dalio's book, Principles, and hoped that they read some of it before we got there. And we just got on the whiteboard and started thinking, what's important to us? How do we want to work together? What is it that's okay? What is it that's not okay? And out of that, we derived the set of principles. And it's important that they're evergreen, you know, they're never finished. It's just a continual work in progress. And we all just started to work through what's the principle for that and how do we want to operate. And I think the key thing is, you know, once there's something on paper, start there, see if it works and continue to iterate on it. So it's a live document for us that we work to. But just having it hidden on Confluence or in a G Drive somewhere is not that helpful. It needs to then be present with everybody. We need to make sure that we're remembering it. And I think that really comes down to the leadership team to make sure that if they are asked a question, you know, hey, what do we do here? That they're referring back to that. Well, you know our values, you know our principles. What do you think we should do here? And then reinforcing that behavior.
Got it. Great. We are coming to the end of the show with our favorite question, which is, if you would have the opportunity to meet yourself at the beginning of this journey with Adepto, what advice would you offer to your younger self?
I would have moved to the UK or the US before starting the business. I think that would be the single thing that I would do differently. Other than that, I wouldn't change anything because I think we're in a strong position. It's exciting where we're heading. We wouldn't be here if we'd done things differently. But if I was going to do it again, I would apply a lot of the experiences I've had to that. And that would really be around some of the things I've mentioned, investing in sales far earlier to gain market share, looking at the differentiation of the product. And I think I'd be more niche in whatever it was that we did. Because I think, you know, every week that goes by, it's easier to enter a market, certainly a generic market, something like HR, you know, it's not that difficult to understand. And so I'd be looking at really going down to a niche specialized product where you're not going to come up against as many competitors.
Very good points. Be niche, be rich. Amazing way of closing the show. Chris, it was really a pleasure to have you on the show again. Thanks so much.
Thanks for having me, Mike.
And to our community, thanks so much for being on that side. We always love to hear from you. Feel free to reach out via mike@scaleupvalley.com to share your feedback about what topics and guests should we have in the show to help you scale from 2 million to 100 million ARR. Thank you so much and keep scaling.